Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. One of the companies that I think is really underappreciated by the market right now is Peloton. And there are a lot of reasons for that. The company made a lot of mistakes during the pandemic, spending way too much producing and shipping bikes to customers. The company just got out of control with its growth projections. But changes made by Barry McCarthy, the new CEO, over the past year have really brought the company to a much stronger financial position. We know from a strategic perspective what the company is doing. It's selling hardware like razors, so it may take a little loss on them, and then hopes to make that up on making a high margin subscription sale long term. And when you think about the business that way, I think Peloton has a lot more potential than a lot of investors are giving it credit for. I've said that this is one of the stocks that could 10x over the next decade, which I recently wrote in an article you can find in the show notes below. I want to dig into exactly why I think that in this video. My name is Travis Hoyam. Thank you for watching Rive Investing. Please subscribe here on YouTube and check out Asymmetric Investing, where I wrote that report. Like I said, there's a link in the show notes. I want to start here with Peloton's financial results, which I'm going to then compare to some competitors. This is Peloton's most recent quarterly report. Now, they do report earnings later this week, so we'll get an update on some of these numbers. But you can see here that members are about flat from a year ago and a quarter ago. The number of paid members is actually rising. I think that's really significant for Peloton. In the current environment, it's actually grown the connected fitness subscribers by 10%, quarter over quarter, 2%. So despite the fact that those numbers are relatively small, that's a positive sign given the fact that people are going back to work, maybe going back to regular gyms. The app usage, which is the bottom line here, is not growing in the rate that I think management would like to hope long term. We'll see if some changes that they've made are able to turn that around. But generally, I think the trend to look at here is that Peloton members continue to subscribe. They're not canceling their services, they're paying their monthly bills. Those bills are actually going up. You can see that from subscription revenue right here, up 22% year over year, despite the fact that fitness members are up only 10%. That tells us that prices are rising. That's really the piece of the business that you want to see growing, is that subscription business. And if those subscriptions are extremely sticky and very high margin, then that's how Peloton becomes a really valuable company. So keep this in mind. Peloton continues to grow, albeit a little bit slower than it was during the pandemic, but has really reached scale with over 3 million paying subscribers and over 6 million overall members. Meanwhile, competitors are looking worse and worse. I want to look at two companies here because these are the public comps that we can look at. Nautilus, you can see that sales were down 33% last quarter. This is the quarter ending at the end of 2022 to $98 million. The company's losing money, lowering operating expenses, lowering selling and marketing expenses. Nothing is going very well for Nautilus. I don't think there's any other way to put it. And when you compare these two companies, Peloton's actually looking better because financials are getting a little bit better. That loss is diminishing over time. Beachbody looks even worse. The number of digital subscriptions down 23% to 2 million. This was a company that was growing tremendously during the pandemic, one of the big beneficiaries in the fitness space, but it doesn't seem like their growth was sustainable long term. So what does all of this tell us about Peloton and the company's competition? Well, I think we need to start thinking about home fitness as more of a potentially winner take all market. I don't think we're going to have 4, 5, 6 digital fitness companies who are going to be providing different niche services to all kinds of different subscribers. That's kind of what we had building early in the pandemic, and subscribers were growing everywhere. But Peloton has proven that it has built scale with its user base. It's added classes. There's now over a dozen kinds of classes. They just added boxing. So Peloton isn't the kind of company you think of as a boxing company, but really it's a digital fitness company. And it's providing all kinds of different solutions to all kinds of members, and there's a little something for everybody. This is really a bundling strategy by Peloton. The company is not just a bike company anymore. It's going to provide value to me because I like biking classes. It's going to add value to my wife because she likes yoga, to my kids because they're doing strength exercises. Maybe we do a little meditation. The more you have in the Peloton ecosystem, the harder it is to cancel that monthly membership. Peloton has proven over time that its membership is extremely sticky, that customers are very loyal, they love the brand, they love the classes, they love the teachers. I think that's something that we need to appreciate more as investors. If they can get their hardware strategy right so they're not losing a ton of money on hardware, this is a company that has a ton of operating leverage. potential. And in a market where all of its competitors seem to be getting weaker by the day, Peloton seems to be getting a little bit stronger. And I don't think we should overlook that. This is a stock that's down over 90% from its highs. So if it just regains those old highs, we're going to have a 10x stock on our hands. I don't think that's crazy and out of the question over the next decade as Peloton builds its user base and grows subscribers, maybe even raises prices just a little. But what do you think about this stock? I'd love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing in that link in the show notes. Thanks for watching, everybody. I'll see you here next time.